Oakley revolutionized the eyewear industry with their high-performance lines of sunglasses. But they ran into trouble in the late 1990s, which resulted from their dispute with Luxottica. But Oakley managed to thrive and eventually got bought out by Luxottica. Let's dive in to see what happened. Jim Jannard, a motorcycle enthusiast, started selling motorcycle parts out of his trunk to local shops in Los Angeles. In 1975, he produced a rubber grip for motorcycles and started selling it along the other parts. This is how the story of Oakley came to be. Jannard's next focus was on motocross goggles. He introduced the O-frame, which he designed to be stronger than the glass goggles that were in use. When demand for the goggles picked up, Jannard started diving deeper into the eyewear industry, producing goggles for skiers as well in the early 1980s. Oakley then moved into the sunglasses market. They revolutionized the cycling eyewear market with the introduction of their factory pilot eyeshade. These sunglasses were made with lightweight impact-resistant thermoplastic glasses. Then the frogskins came out, becoming popular amongst surfers and skaters. Jannard banked on celebrity endorsements to get his products known. It started with the Tour de France 1986 winner, Greg LeMond. From there, Oakley continued to disrupt the market by introducing new products, such as their Blades model. With their superior sunglass tech, Oakley managed to score famous celebrities like Michael Jordan, Bonnie Blair and Cal Ripken. Needless to say, Oakley's brand became known worldwide. Athletes from all sorts of sports would wear Oakley sunglasses. Revenues soon broke the $50 million mark in the early 1990s and surpassed the $100 million mark in mid-1990s. Oakley's sunglasses had transcended the sports market and appealed to the broader fashion segment. Newer product lines were launched and geographical footprint was expanded to over 60 countries. Their product lines covered different price spectrums. Frogskins started at $40. Blades were at $110. M-frame sold for $130. After building its impressive catalog offering, Oakley went for an IPO in 1995, raising over $200 million. Although Oakley fell prey to imitators, it successfully defended its patents in court. Since the whole business model relied on the patented tech, Oakley hired private investigators to go after unauthorized distributors and counterfeiters. Expansion was afoot when Oakley decided to move to bigger headquarter offices, which would cost over $30 million to build. Oakley delivered strong financial performance since its IPO and kept innovation as a priority, announcing the introduction of the X Metal series. Oakley even dove into the prescription sunglasses market by partnering with Essilor, promising delivery of the glasses within a week. Everything was working in Oakley's favor. What could go wrong? If you watched my video on Luxottica, the largest eyewear retailer, you might remember that Oakley had a pricing dispute with them. Oakley's sunglasses would cease to be carried by Sunglass Hut, who would favor Luxottica's Ray-Bans. This caused an instant drop of more than 30% in Oakley's stock price. From that moment, Oakley was in deep trouble. Financials worsened. Revenues and net income took a hit. Oakley tried to remedy the situation by extending and introducing new product lines. International expansion was also a priority, only that this time, direct distribution was preferred. OneXL, the provider of face shields for the NFL and NHL, was acquired to diversify the business lines. Staying in the lane of diversification, Oakley decided to venture in the footwear market. The O shoe was introduced in the late 1990s. Nike had entered the sunglasses market and Oakley had filed lawsuits against them claiming Oakley's patents were infringed. I guess that the move to the athletic shoe market was a way of retaliating against Nike. By the start of the millennium, Oakley was also offering wrist watches and apparel. To get a better control over distribution, Oakley decided to buy its foreign distributors in Australia, Canada and Austria. Over-diversification seemed to have caught up with Oakley. Although revenues were rising, net income did not follow as the footwear division was not yet profitable. Jannard still believed in that business and did everything he could to turn it around. Production was outsourced, new shoe lines were produced, prices were reduced, and more retailers carried the products. All of this helped the shoe line reach profitability. The general business was picking up steam, with Oakley's first retail store being opened, along with the launch of their website in 1999. But the smoking gun was probably this. Tom Cruise wore the X medals in the opening scene of Mission Impossible 2. When Luxottica acquired Sunglass Hut, Oakley knew it had to quickly diversify its distribution network. They knew from their previous encounter with Luxottica, that their products would be kicked off the shelves again. Oakley thus bought Icon, which operated sunglass specialty stores under the names Sunglass Designs and Sporting Eyes. Although the U.S. sunglass sales were lower due to the Sunglass Hut dilemma, international sales and other product categories acted as a safe cushion to soften the blow. Oakley kept expanding its geographical footprint and opened new concept shops and department stores. As always, I have plotted the financials to track the firm's progress. We can observe the dip in revenues in 1997 after Sunglass Hut reduced its orders from Oakley. But since then, revenues grew to over $750 million in 2006. Oakley had been active in the acquisition space, buying Oliver Peoples, optical shop of Aspen, S and Bright Eyes Group. When we take a look at operating income, we can see the dip in 1997 and another dip in 2002, both corresponding with Luxottica's moves against Oakley. In 2006, the firm announced it had to restructure its footwear division again, discontinuing most of their lifestyle footwear products. Luxottica finally bought Oakley in 2007 for more than $2 billion. Jim Jannard went on to form another company, the Red Digital Cinema. Red is known to manufacture cameras used to shoot movies in the likes of The Amazing Spider-Man, The Hobbit and The Great Gatsby. The company ventured in the smartphone space with its Hydrogen One phone in 2017, which was then discontinued due to poor reviews. Do you own any of Oakley's products? What do you like about them? Does it bother you that Luxottica owns them? As always, let us know what you think.